Hi, this is Amy Bonus here. Just wanted to go over some mortgage basics with you. We get a lot of questions about mortgages in general, like the difference between conforming loans and government loans. Government loans are comprised of USDA loans, FHA loans, VA loans, and then there are this other segment of loans called conventional or conforming loans, which are generally speaking Fannie Mae and Freddie Mac loans. Right now in today's market, listing agents are preferring that buyers make offers with conventional loans, which are typically a little bit harder loan approvals. And just so you know, getting a government loan, at least with our firm, is very easy. So a lot of times the listing agents aren't really informed on how easy a government loan is. In fact, appraisals are not really harder on government loans like a lot of listing agents think. But the reality is conforming loans are typically for a little bit stronger borrowers. And so conforming loans, they have a maximum loan amount. That maximum loan amount today, which I'm sure will change within a few months, it's usually changed one time a year, is about $548,000. When people borrow above $548,000, it's considered a jumbo loan. Then we get the question of people go, hey, what about an adjustable? Is an adjustable a government loan? Or what are the advantages of an adjustable versus a fixed rate? Well, we are in a fixed rate market, and we have a saying in the mortgage industry, let the trend be your friend. Rates are so low right now. Why on earth would you even try to get an adjustable rate? Typically, the only firms that are selling adjustable rate loans right now are credit unions because they can't get competitive fixed rate products. So an adjustable can be a government loan or a conventional conforming loan. And so that's just one thing to note. It really doesn't affect, your ability to close on that house for that client. The other thing people ask me is what determines the down payment for people? Well, what determines the down payment, of course, is how much cash they have or how much cash they can get. So they may not have any option at all but to do down payment assistance loans or USDA loans, which are great government loans where people can get in with zero down payment. And then another thing that people are confused about is that they think that the down payment is the only thing that they need. And that is absolutely not the case. You need a down payment. You need your closing costs, which are typically just a few $1,000s. You need something called prepaid items. The third thing you need are prepaid items, which is like a mortgage payment and a prorated portion of your property taxes and your fire insurance. And then the fourth thing that you need is appraisal gap money. If they're buying a house for $300,000, but it appraises for $290,000, probably you may not be able to negotiate the price down to $290,000, and they're going to have to come up with at least a portion of the difference based on what is negotiable with the seller. So, that's a little bit of what they need. Typically, when they go to the closing table, they're going to have to wire in the funds, irregardless of the loan type, to the attorney, and they're going to wire that in a day or so before the closing. We typically send out the CD about 4 days prior to closing, and they'll have to sign that closing disclosure. Now, how do you get your offer accepted in today's environment, or really any environment? I've been doing this 30 years, and I have rarely seen an environment, I've never seen an environment like this. You have to have your clients pre-approved right now, not pre-qualified. When you send them to us at Go Prime, Amy Bonus, Go Prime Mortgage, we're going to actually run their loan through underwriting and make sure that they have a loan approval that we can put in writing to you. We actually send you a snippet, like a copy of the approval to show to your sellers to help you guys get your offers accepted. If you have any other questions on just the basics of mortgage, how they qualify, it's based on their capability, which is their income, their credit, number 2, credit, and number 3 is the collateral. We call this the 3 C's of lending: capability, credit, collateral. If you have any other questions, just feel free to reach out to me. You can reach me at amy@amybonus.com, or you can Call us anytime. We're available 6-7 days a week at 919-414-4430. Thanks for listening in.